Good morning. A Veterans Day today for all those that serve. Thank you very much. I'm Ryan McGough, and I am the bodybuilding businessman and real estate investor. Please like, subscribe, share this channel as we share information. That is the beautiful thing about this day and age. Technology can be a beautiful thing if we choose to make it that. And if we choose to use it in the wrong way, it can also be a very detrimental thing. I try to use social media to the advancement of all of us, right? To share things that I know and learn and have accomplished. My point of this and this communication today is about Intellicom Investments, which is my real estate brand, my real estate company. And we're doing some cool things in the market right now. We're just sitting back, looking at the market, analyzing, and we analyze about 1,500 properties per year. We make about 5 to 10 offers per day, and that usually translates to about 1 to 3 properties per month, right? But right now, we're getting probably 4 or so properties under contract each month. So it's showing and that's because properties are sitting longer, and that's because the interest rates, and there's a lot that goes into that for sure. The important thing about it is in rock solid areas of the DMV and some of these other areas that have historical growth, it would be in my consideration a dip in the market, right? I mean, get your facts and your information from wherever you choose to, but I do believe in buying, and which is kind of what I'm talking about today, fundraising and this new kind of fund that we're building and model that we're building to take on to scale, right? The Burr method. And I talked to some people, and I remember a conversation. Somebody said, "Yeah, no, somebody was doing flips and that, and they realized that the better idea was just to break ground and start developing, and they mentioned that they found a scalable method, and that was developing. And I was like, I mean, I think you can definitely scale flips, you can definitely scale burrs, you can definitely scale short-term rentals. And in fact, I think actually to raise a fund and create enough capital to bypass the banks, if you have no loans on these properties and you can give out 5-6% on these properties, right? If they're at an average of, let's say, like $400,000, right? And then we can split the rents on these. Most people, in this fund, in this option, are going to get $2,000 passive cash flow, right? It just reminds me, in the DC metro area, we had this thing on TV that was like JG Wentworth, and he was like, "It's my money and I want it now," and in a lot of these and it was all over the place, and they had all these different commercials. It reminds me, because I'm in a lot of multifamily groups and stuff like that, and a lot of these multifamily options, you're not going to make anything until the loan is refinanced, right? And then your equity stake is pretty good, but I think when I've developed this fund, it's more to raise capital on a much bigger level. We're looking for 13.5 million over this year, right, to buy 25 multi or single family properties. The intent to put another unit in the basement, right? All of them we're going to renovate, right? Because all of them are sitting on the market because they need some work. So they're sitting there because they need work, and we're going to do that work. And people are buying only the top of the market, the flips. Nobody wants to come in at this high of an interest rate, leave their 2-3% interest rate, and get a fixer upper, right? And then like a K loan on top of that for that much money a month, and that big of an interest rate. So it doesn't make much sense if you look at it, from that standpoint. But if you look at it from another standpoint, if we bypass the bank, now we can give a monthly, right, to people for their investment, and our primary focus is to marry one person's investment to one property, right? So a $400,000 one investor, $400,000. which we did raise 400,000 for one property, and it's a steal. You know, the property's worth over 600,000 when it's renovated. We're in at about 430,000. You know, so needs a $30,000 renovation. It's all just drywall, patch, paint, trim work, flooring, staircases, you know, all that. It's really nothing other than that. Truthfully, we have an inspection for it and everything. So, you know, we're doing the due diligence. We know what to look for. We know what we want to see. We know what we don't want to see, right? Because everybody's gone through working on projects where they're just floor joists and subfloor and, you know, foundation. It's like, I don't want to lift it. In this model, with what we're finding, we're passing on all of that other stuff, and we're looking at class A, class B, nice houses, potential for 2 units, right? 2 rent long term, or 1 short term, 1 long term, right? We're looking at cash flow. We're looking at how to make cash flow, because rents are actually probably going up, they say, about 6% this year, right? And so there's a lot of things that the market is saying that we're listening to, right? So that brings me to the point of, if you and we as a team want to raise this much, we want to and need to look at this on a much bigger level now, not one property at a time, right? Because the loan options, you know, the hard money or the private, it's just all these things and terms change at the end, right? We have one coming up next week where it was a $50,000 down payment, and we're on another property, and then we have another one closing with, you know, right after that, and then we have a flip closing, you know, at the end of this month, and then 15th of the month next month we have another, you know, another nice rental property closing. So all these closings, they all have earnest money. You know, we have a construction crew that costs money. We have a construction manager and a foreman, and, you know, all these different things and pieces that are expenses, CapEx expenses for us, right? That cost money, operating expenses, I guess you would call them, and they cost money. So we don't want to be going in and having this much leverage and all this capital inside of all these projects. We want to use a you know, other capital from bigger places, bigger firms. So that is the new model now, and it's going to raise $1 million, $2 million, $5 million, $10 million, $13 million at a time from 1 to 4 sources, right? So it's a different type of strategy. You know, it takes a lot more, and for me to how to explain it is, we put all this time and effort into the deal, right? So we're running 1,500 numbers each year, right? We're making 5 offers a day. We're looking at the market. We're looking at numbers. We're seeing where we want to be in and what we don't want to be in, and somewhere that we were at is overcrowded, or a new space opens up and it's a new undiscovered thing. So that's the stuff we want to focus our time on for finding the deal, building relationships with realtors, right? They'll, hey, this is a cash offer guy. Let's, you know, offer, or let's send our property out to them. All of that kind of stuff. And so when all those numbers and all that translates, we start to get a lot of deal flow coming in. And then capital comes, you know, to the question, or it's our biggest bottleneck. And a lot of times it's very challenging for somebody to want to, you know, abandon all that work that they put in on the deal flow, right? Or step back from it and try to fully integrate themselves in raising capital, in talking about capital, in meeting people who are the owners of companies, lawyers, you know, some of these other people. And, you know, one thing I've noticed, if you're trying to really, one thing I've noticed, if you're trying to raise a project at a time, which is a couple 100,000, or at least 2 people on one project, let's say that's 200,000 each. It's a different model and a different strategy and a different place that we have to go to, right? Because normally, if we're just raising for the down payment, it's going to be 25 to 50,000. The pool of amount of people that could fund 25 to 50,000 is very large, right? You know, lawyers, doctors, those kind of things. But the pool of somebody who's going to fund, you know, 400,000 by themselves, right? an entrepreneur, multiple entrepreneur, like multiple companies, right? I should say, for the same entrepreneur. So, or it's institutional capital, right? It's VC, angel investors, that kind of thing. So there's definitely a change up from who we were talking to before. So when we present these new ideas of this triple play, of this get equity, 50% equity plus average of $2,000 cash flow a month plus, tax depreciation, and that kind of stuff. Now there's a whole different person that we're marketing to, but our list of who we had marketing to for 25 to 50,000 and our partners who are in at 25 to 50,000, right? They're not necessarily the right person for this model. So I'm learning a lot of times with this type of thing, it really requires like going out, letting somebody come back to us, right? Going out, putting 5 videos up a day, talking about it. What are we doing? This is our new model. We're looking for, to raise this, but we have to show we're also experts and we know what we're doing and we're always watching the market. And so, right. So there's a level of both of those. So when you're doing 5 videos a day, pictures and that kind of thing, it's really hard to like pretend to be somebody else all throughout the day, right? You wake up, you're posting some content, you put a video up of reading a book or studying or presenting a deal that we have or showing contractors on site. Like that is everything that I'm doing, 24 hours a day. It's truthfully, I mean, of course I sleep, but it's what wakes me up in the morning. Oh, I have to fund this deal. Let's go, hit a fasted cardio real quick, read a couple pages of my book and then get to it, put something out there. Hey, group, a mentorship program, all this stuff that I'm in and doing. What about this? I got this deal I need 20K on. I have this 400,000. Where should I go? Who should I talk to? So it's all about putting it in, and it's a full-time job in itself, right? And so it kind of requires to set some things up with the other pieces in the company and really be able to fully focus on that. I can't be talking about what paint should go on this walls, right? So I got to start hiring people that are great at those kind of things that allow me the time to fully immerse myself in capital raising, building relationships, because the pipeline is very big for raising that much money. I mean, there's a lot of people that have to be crossed off that list. It has to be a few different conversations. It has to be a live call. It's some text, some emails, a lot of no's, and then just constantly seeing what we're doing. And now, as one of the really big pieces, we did get an investor portal. So it really shows, it allows people to invest in our portal. It allows them to actually send wires. It allows them to send promissory notes through. It allows them to see pictures of the properties. And we are now taking investments through that portal, or taking in, because when you do one project at a time, you can go straight to title, right? Investor can be on title, or we can be on title together as the company, or they can be on title, or they can have a mortgage against the house and they become the lender and we're the borrower, right? So there's all different ways you can structure that's done through a title attorney. It's really a lot easier for a title attorney to call someone and ask them for a wire and give them wiring instructions. It's really hard, much harder when you're asking for that money directly. But if you have a portal where this person can put in this much of the deal and this, and everybody gets to see where their portion of this deal is and what they're subscribed for. So it allows for people to feel a little more trustworthy. And now we can just put our deals in that and then send those out. So that is one new thing that we're doing, the portal and the time allocated to raising capital. And I'm getting around people who are raising capital, thinking about raising, having conversations with them. I got to tell you, it's some funny conversations, because a lot of raising capital is about status, and it's one thing to come in. Hey, can I maybe get into the, like you're going to take millions of dollars and go do great things, but you have no intention. You're questioning, hey, maybe can I, already you've put yourself as the B and they're the A. You're worshiping the ground that they walk on, and oh, thank, and going from that to being like, no, I'm a player. I'm just as big of as an A as you are, and my time is just as valuable. And so it was cool the other day. I got to sit on a fundraising event, and I have a book on that wall over there called Pitch Anything by Oren Clough, and he was one of the people on that. And it was cool just to see him talk about framing. And so it's funny when you get on these capital calls. Yeah, bud, what's up? I got 5 minutes. I'm like, oh, I got 3 minutes. So can't really do too much here. Did you want to have another call? No, I'm fine. Which, it's like framing and reframing and framing and reframing. And I went to go get in a group the other day, and this person came out, man, Hunter from one of these capital raising groups, and man, it was a freaking framing contest. Yeah, but can you see yourself spending 5,000 for this group? I was like, yeah, but wouldn't you admit there maybe is one person that's great and they don't really need the group, because the group's kind of for people that need to pay to get in. And I'm kind of above that. And he's like, yeah, but wouldn't you, just like framing what he said. He's framing it and I'm reframing, and he's framing and I'm reframing. We just went back and forth and back and forth. And, it was fun. And it's like practice. I used to get mad and offended about stuff like that. And I just realized, like, you can never, never get offended about that kind of stuff, and just be better, frame it in a different way, break that frame that they have, the power frame, the analyst, the numbers don't line up. Yeah, but it's not always about numbers. If it was numbers, we'd just send you things and you just review them and say, this is the best number. You'd never meet anybody, right? But it'd be like The Voice, right? But it's not. It's about more than that. Like, you want to see this person, you want them in your office, you want them to pitch and have enthusiasm about certain things. So it's very much a frame heavy, a status heavy thing to go in there and ask for that much. And it takes a lot of framing and reframing and frame fighting, in that way. So that's what I'm learning about capital and this capital industry. And as I come off of a $460,000 raise, and I tried to raise another $300 in a week for this next property that we had, because a lender changed the terms. And I just get really bothered when that happens, because all of this money and pieces are all ready, and then they change it and it's another $20,000, and you don't know until the end. And so I wanted to raise that 300 and some, to just not let them even in the deal, and let them get their monthlies and all their interest that they get, which is, it's a lot, 12% per month and 2 points up front, and, all that. So I wanted to raise them out of it, but, with all of what we're doing here, packing our whole house up when we moved to Brazil rent free for 3 months, and some of this other stuff that we're doing, which is wild. But it's all real estate, man. If you're investing in it, like, I'm always surprised when, like, a real estate company like leases out a building and pays a lease for 5 years. Like, how are you, if you're in it, you're doing flips, doing renovations, how would you not buy yourself a low cost office, right? Renovate it, boost its appreciation, own this office, right? Use it for your business, and it's increased in value and it's appreciated. So, like, I'm always surprised when people like do it and talk about it, but when you really look at what they're doing, they're not doing it, right? So I'm in real estate. We're going out of town for 3 months. We're coming back. It's a very slow market. I wouldn't sell my house now. My house where we moved was made. We did it because we saw that the line of, interest and of high growth kept moving closer and closer. So we kind of moved to another state that was right in this line, which is Harper's Ferry, West Virginia. We moved there when we lived in the Washington, D.C. metro area, Sterling, Virginia, some of the Chantilly, some of those other places that became like $1 million markets. So we moved like right on that cusp, got in at very low, right? Under $200,000 like 5 years ago, and it's now, 350 or plus now. And didn't even need to do any work on it or anything. So it's blowing up now. There's solar farms. They're building a new power distribution center now that's going to have big lines and coiled lines and all that kind of stuff. So it's upgrading even from like a low, big, little power lines on wood, right, into like a big infrastructure. Now they have solar farms of 400, 500, um, you know, acres out there, half of it's solar and half of it's development. And then there's 4 areas right here that are being developed as we speak. So 1,000 new houses going in. So right as we thought this was happening, we're going to rent our house out and just watch this appreciation go. Now we're going to rent it out because we're going to be living in Brazil while my wife studies for the bar. So we live there in the summer, hang out, rent this house out. We have no rent, rent free. We have a property we're looking at and potentially thinking about house hacking. So it's not risky because we have the properties in the pipeline. We're just going to pick one and rent that out, right? Which is one we own and we flipped. So we're just not sure exactly which one it's going to be, but we're going to rent this out and live rent free and actually collect about $1,000 rent, over the course of these 3 months, and then pick what we want to, or extend our trip out there. It's winter here, about to be, right? We leave in November, which is November 13th. We're leaving, and we will come back on February. So super excited, but I live it. I read the market. I look at projections. I look at things. I rent out to live rent free. I'm willing to house hack and kind of, all of the things, right? All of the real estate things. I love it. I'm in it. I research it. I read about it. I live it. I live it and breathe it. So I'm always surprised when somebody's not doing that. In my office, when I get one, or if we get one, will be the same exact way, because it will be, it will be done through the real estate way of things, right? And through the cash flow way and through the creative abundance thought process way. So, all right, y'all, excited to hit you with the little in telecom investments, real estate, talking about capital and a little bit of private funding and fundraising and even starting a fund a little bit. So if you got anything out of that, please like, subscribe, and share with somebody else so we can keep this thing going. That's my goal and my dream. All right, y'all. Thanks.